Will S&P 500 go up or down? I don't know, but this particular video you're watching, I'm going to be unpacking everything you need to know, the good, bad, downside, everything you need to know about S&P 500. I'm going to be unpacking it in this video, so do well to stay to the end of the video. If you're new to the channel, welcome to the channel. This is Kayk.Trades, where we help traders to understand what the market is doing and grow together. Comment whatever pair you want me to look up for you on in the comment section, and I will do that for you. So let's get straight into the video. So as you can see here, the index experienced a sharp 18 to 90% drop in early April, reaching let's go to the one more time frame. So this is clear enough. My key levels are probably plotted. I don't need to go over this again, so let's just go to where we're here. So like I said, the S&P 500 experienced a sharp 18 to 19% drop in the early April. As you can see from here, this was the drop here. This was the massive drop we saw from it. Although the market kind of reversed back, but initially there was a massive drop in the market, and I will tell you why there was a drop in the market. So initially you could see that this high, there was a lot of bullish movement here with no major retracement going to the upside. So the market had to come and give some sort of retracement. Even at all, we are going to continue to head to the downside. This was a lot of imbalance around here, so the market had to come here and correct that imbalance that is here. But now, as you can see, the S&P 500 is currently at its all-time high, which is 615,726. That's the all-time high that we can see S&P 500 in. Let's go to the one more time frame and let's see what's happening. Let's go to the 1 week time frame and let's see what's happening. So guys, you can see on the 1 week time frame, guys, carefully monitoring this market, and you can see there's not really much we can say on this market. They fail to even bring above here. So if we eventually see S&P 500, move above this level here, break above this high here, you say S&P 500 break above this high here, then we can rest assured that I'll probably see S&P 500 push over to the 70,000 region. So that is where S&P 500 might potentially look towards gradually into. But if we come here, it's because of two reasons. Probably because of the continued Fed support and the robust tech advances. As a lot of businesses introducing AI into the S&P 500. So if at all we are going to see a bullish movement on the S&P 500, it's going to come from either one of these factors. I do not want to totally rule out the option of a bearish movement, because as it looks here, the market broke down here fine, which is good. As you can see on the 1 month time frame, we saw this bearish movement, which I explained that the market dropped. So now the market dropped here, and it's been taking a while to come back to this higher high, which is the highest high that the market has ever gotten to. So it's two ways now. If you get here and decide to give a double top, if you give a double top here, then we will rest assured that we're going to probably be heading down to about 5,000, like 5,700, and that will be because of the conflict escalation and stalled growth. Key factors to look out for is the oil price spike and Fed surprises. So if we are told we're going to see a drop from here, that will probably be why. But here right now, we cannot potentially give a pure direction on where the market is going to. We have to allow the market confirm a direction to us. This is why we don't have to be impatient as traders, especially as swing traders. We need to be patient, allow the market to play out whatever it wants to do to us before we enter into the market. So I'll be anticipating and be watching S&P 500 come up to this level here. To see S&P 500 come up to this level here and probably potentially break above here, or when we come up here we can push below down here to like 1,700. So we also need to monitor and watch the evolving Iran and Israel tension, then tariff deadline, which is on July 8th, and the Fed policy announcement for catalyst. So these are all criteria that we need to watch out for. Before we place a specific trade into, we need to allow the market come up here, which is the highest high, confirm a direction to us, either bearish or bullish, before we know what's going to happen. But I've given you the factors that might determine what might make this market go either up or down, and I'll go over them again. So in case of the bullish movement, we could because of the continued Fed support and the robust tech advances. As we know, AI is doing a lot now, helping businesses evolve. A lot of businesses are kicking off and starting off through AI. So this probably be the reasons why we will see S&P 500 go up, and if not, probably because of the oil spike and the Fed rate surprises. So either of these two factors, there's nothing really much. Let's go to the 1-day time frame. Nothing really much happening on the S&P 500. Just waiting for the market to sort of confirm a direction to us. As we can see here, it's a lot of stalling around. So I still see this market potentially coming here. Let's see what happens. I still feel like the market might come here before even making any decision. But if it comes here, we need to be very careful because that's already that's double top on the highest time frame, and we understand what time frame means. We understand what chart pattern means on higher time frame. So we need to be really careful, guys. Let's go over to Nasdaq and let's see what's happening on Nasdaq. Nasdaq is at an all-time high, which is 22,209. As you can see, the market is currently still around that region. Momentum remains positive in tech, still valuable to rotate and macro shocks. So you can still see the Nasdaq push a little bit higher to the upside. Maybe it was 24k, 28k thereabout. Let me map out this level for you. Let's see 24k. So I can probably still see Nasdaq move up to 24k. But right now we're currently at this all-time high and we're still stalling around. So we need to wait for the market to confirm a bias direction. And when the market does that, we are good to enter. So as you can see here, trade is stalling around this 21,764.86 level, and the Nasdaq 100 last closed at its all-time high around 22,175 in February. That was back in February. So there's not really much on Nasdaq now. As you can see, we could see a potential bullish movement to the upside. But right now we need to be really certain, and we need to wait for the market to confirm a direction to us before we can place our trade. So it's a whole different game. I do want to draw this trend line for you guys so you guys can have a grasp of it properly, can understand it properly. So yep, this is it. This is my trend line. As you can see here, you could see that Nasdaq might potentially push over to 24k or probably 28k upwards in the coming weeks. So far as we are able to break above this level here, let me map it out for you so you can see it clearly. So far as we're able to break above this level here, which is right about here, is as long as we break above this level here, which is resistance here. Once we break above here, we'll turn it to a support. Then we can be looking at 24k or 26k upwards for Nasdaq. But also, guys, before we go, I also want us to talk about one or two things, which should be about what can actually really affect these markets from performing the way we want it to perform. It should be the Middle East tension. Israel and Iran are highly impacting stock while oil remains range bound around $75 to $80, further escalating the shift sentiment. So anything that happens right now, there's currently a war between Israel and Iran. So this is really making the stock market unbalanced right now. So we need to, sit on our hands. Exactly, it's at the period where we need to sit on our hands because the market can be very, very volatile at this point. Sit on your hands, have a plan, and stick to your plan. That is what you need to do this period. So yes, slowing labor data hit at mid economic moving. This says so another thing that could affect the market is the Fed and economic data. Fed has paused rate cuts, inflation nearly meets 2% target. So what we understand is that usually when inflation of the EU when inflation goes up, we most likely see the bearish movements for the S&P 500. But when inflation is stable and when inflation goes down, you'll probably most likely see bullish movement for the S&P 500. So that is why I said there's a lot of factors to consider that would affect the market. But as long as you're able to map out all these factors and also have a trading plan and sit on your hands for the moment, I think we should be good. So I'll be giving you guys any other further updates that you need to know when it comes to the S&P 500 and the Nasdaq. But further ado, if there's anything you want me to, if there's any pair you want me to touch at all, from the forex market to the stock market, please drop your comments in the comment section, and please don't forget to subscribe, like and share this video, because at the end of the day we want to grow the community, right? So we want to try as much as possible to push out this content to more people. So share with your friends and family, and see you guys in the next video.